Well, greetings and salutations. Another Tuesday evening. Can you believe it? Another week's whizzing by. And I'll just put the pre-show on for a moment or two. Welcome, everybody. Nice to see you in the chat. And thanks for coming down to spend some time with me rather than with the treasurer, of course, is making the budget speech. I'm not trying to follow the budget speech tonight, by the way. I'll look at it later because it's on one hand quite predictable, and also, there are lots of other people commenting on it as we go. But what I would say is if you've seen anything significant from the budget, throw it in the chat and we might talk about it. Now, before I get started, of course, we have the dogs to talk about. We have 3 dogs tonight. Trix is back with me. I'm dog sitting, so I've now got 3 dogs to walk, which is quite fun. 2 arms, 3 dogs, so you can figure how that goes. But we don't seem to go too badly. And you may have noticed that they shuffled around from the last shot. And they've been up and down barking at the dust cart, which went through. And for those who've not seen it before, this is the studio set up here. We have quite a significant array of stuff going on because, of course, we make these shows very regularly. But generally, you can see here we've got the chat going up at the top. We've got the super view over there, which is the multi-view of the different streams. And then we've got a few other screens and some content screens that we actually use. And we're also streaming to a separate streaming encoder as well. And been running the setup now for about a year and a half without any major ructions. And the good news tonight, we didn't have any technical issues on the way in. Sometimes we do, but not tonight. Right, pre-show going away. I'm going to start the show. I'll be back in just a moment. Good evening and welcome to this live stream on the 25th of March 2025. It's Martin North here from Digital Finance Analytics. Thank you very much for coming on tonight and spending some time with me. The Chancellor's, I think, just finished, according to Jason. So, and nothing much new, I think, is the headline. So maybe no surprise given everything we knew, but we will touch on a few of the issues. But Jason, as you say, gaslighting about how good things are and how good they are, etc., etc. Remember that this is a political event ahead of an election. It's marketing, it's sales. It's nothing to do with long-term management of the economy. It's nothing to do with pulling the levers to get a fairer economy or anything else. This is about Labour trying to win the election again. And well, we'll go into some of the details of that this evening and talk about some of the bits and bobs that are there. Now, just before I go on, I will just remind you, of course, that we don't provide specific financial or legal advice. This is a general conversation. We moderate the chat, but feel free to throw your questions and comments in. And if you'd like to ask a question, if you use that Walk the World, that'll get it into my queue to make sure I see it. I don't necessarily follow everything else that's going on in the chat because there's quite a lot generally. But use it Walk the World to get my attention. I've also got Super Chat enabled, which means that you can get your question to the top of the list or indeed make a contribution to what we do around here. We really appreciate those who do support us via the Super Chat or indeed via Patreon or via the other mechanisms, including PayPal. We don't do this for profit. We do this because we think there's a really important conversation to be had. Now, I should explain that the show will be slightly different tonight than advertised because unfortunately Phil from Spacious had to cancel at very short notice due to personal circumstances. So I was expecting to have him on tonight, but unfortunately that'll have to be postponed. But nevertheless, there's plenty to talk about. And so there will be an opportunity, I think, to kick around some of the issues that are out there and specifically perhaps look at some of the data. And very importantly, of course, looking at some of the modelling that we've done. So I've got online a whole bunch of resources. I've got all the stock prices available to us. I've got the modelling on financial stress and mortgage stress and rental stress. I've got the postcode engine online, and I've got some other stuff too. And I've got some slides and things to kick around. So this is very much a question of we can make it pretty much what we want. And what I can promise you is there will be a lower expletive count tonight than last week. But I have to say that I hope you enjoyed the outing last week with Andy. That was quite a show, and it got good coverage afterwards. So that's the story, and let's just acknowledge. Ben said, Chalmers budget BS. Yep, pretty much. MCM says, evening chat and Martin. Hello there, good to see you. And nice to see, of course, some of the old favourites. Now, Cookie, you asked an interesting question. Why are bonds fluctuating? Is it because of Trump's antics or something else? Actually, it's a really, really good question. And, if you think about it, bonds are about the price of money. And it's specifically about how much governments need to pay to be able to get the funding they want from the markets. And that price is driven by supply and demand and also risk. And so to understand what's going on in the bond market, we need to understand what the supply and demand equilibrium is likely to be and what the risks are. And I think a good place to start, I'm just going to bring this chart up if I can find it, would be to look at the German 10-year bond. Let's bring that up. So let's go to there and push that. Okay. So this is the German 10-year bond. And it's worth noting that it's risen quite significantly. But that big tick up that you see there through the latter half of March is to do with the announcement of their very significant stimulus package. Now, it's going to be for defence and for infrastructure build, but what it means is they're going to issue a lot more bonds. Now, of course, there's not a euro bond from the ECB. There are euro bonds, but they're actually relating more to Aussie dollars out of the US. So each country, and specifically Germany, will be issuing bonds, and so that put a very significant uptick. And it's worth reflecting on this particular chart here, that the story, of course, is one where we find quite often when demand for bond goes up, the price goes up. In other words, when I say price, I don't mean the price of the bond, but I mean the interest rate. Because remember that bond prices and interest rates work in opposite directions. So that's something to understand. So in other words, when the interest rate goes up, it means that people are effectively saying, I want a bigger return over the life of the bond than previously. So one of the reasons why bond rates are rising is because of greater demand. And I think also it also does reflect greater risk as well, because of course we've also got the situation that we've got the Trump factor, particularly around the tariffs, although we won't quite know what April the 2nd looks like. There's some gossip about whether in fact it'll be more selective than previously advertised. So how much of it is posturing and positioning and how much of it is real, we don't know. It's a big sort of it depends question there. But we also know that, of course, globally the debt is going up. That means there is more demand. That means that investors are looking at this and saying, well, hang on a moment, maybe there are more risks here and we need to be rewarded. The other point, of course, is that if you're actually an investor and you're thinking about bonds versus stocks, you think about the returns in the stock markets. If the stock markets have been doing really well, you might put more money in stocks rather than bonds. Whereas if you've got a level of uncertainty, then bonds tend to be a bit of a shelter. And I think it's worth understanding that bonds do therefore react as a bit of a counterbalance, particularly when stocks are actually perhaps a little bit iffy. And let's face it, we've had a significant move down in stocks relatively recently. If you look at for example, here is the ASX 200, and you can see that we touched almost 8.6, but we're down below the 8,000 mark now. And it'll take a little while probably to get above that again. Nothing really is going to probably move it a lot higher until after the election, until perhaps we see how the Trump tariffs play out. So if people are actually looking at stock markets and thinking, where do I put my cash? And those bonds are actually still paying significant returns, then many investors will say that's a better place to go. So the second then issue is the investor sentiment and appetite. And just on that, I suppose we can look at the Aussie 2-year as well. Remember that the 2-year bond is a proxy for the cash rate. And you can see there that back in December, we had a proxy for the cash rate of 4.2%. Now we're sitting at about 3.7%, which was quite a lot above where we were back in August. But the fact of the matter is that it's down a little bit. And that's, of course, following the RBA decision to cut the rate once. They probably won't do it again. But if you look at the longer term bonds, this is the Aussie bond, you can see that they really haven't pulled back, and they're still sitting at 4.5. And so the other aspect to talk about with regard to bond pricing is duration. So in other words, do you go short? Do you go long? And when you actually have significant uncertainty that looks as though potentially it's going to impact stocks, particularly in the short term, some investors will then go longer. But what you often do see also is a sort of a leveling out of the yield curve from the short term to the long term because of the uncertainty. So I guess the bottom line is there is some uncertainty in the mix here, but nevertheless, short-term bonds are actually down compared with long-term bonds, and that tells me that it's something beyond just the Trump uncertainty and the tariffs. It's actually about the amount of demand for debt that we've got and going forward, and the relative returns from those bond markets, relative perhaps to equity markets. And my view, and I've had this view for some little while, is that the equity markets are going to go and continue to go through quite a considerably wobbly period. And those of you who have followed my other show at the weekend, I actually put this chart out at the start of my show, Markets Trying to Make Sense of the Senseless. There's a hell of a lot going on at the moment. And I don't know whether you saw, but Christopher Joy published a really interesting article the other day saying Trump 2.0 is different and could go two ways. And he basically says that if Elon Musk is capable of really squeezing out significant government spending, in other words, the debt level goes down, then you might see in the medium term, some destruction of wealth in the short term, but perhaps it won't be too bad. But he says the second scenario, which is considerably worse, is that they're not able to really deal with the significant growth in debt. And as a result of that, the second scenario, he says, is seriously bad. It could plausibly be like the 2008 global financial crisis in terms of the impacts on assets. US equities could plunge by more than 50%. In his first scenario, he's still talking about a correction plus, but in the second scenario, significantly more. So it comes back a little bit to, a little bit significantly to what you think is likely when the question of tariff land and the question of whether the Elon story is mostly just smoke and mirrors or whether there's going to be real savings. And of course, there's a big debate about how much they've actually saved. And of course, there's quite a lot of noise out there, particularly from Elon and co, saying, well, we saved a lot already, but then have we really? And, what are the consequences? The courts are getting involved. That's something else to bear in mind. And one of the points that I'd like to make is that the courts and Trump are going to collide because, the Trump administration flew people out from the US. The court said, bring them back. And the Trump administration said, no, we're not going to do that. And they landed in El Salvador, I think. Now, that is going to rise up and ultimately is going to be one of a series of potential friction points. And it comes back then to the question of where you think power lies and where power is going to lie. Is it going to give more power to Trump and the presidency? Is it going to redefine the relationship between that and the courts in the US? Because up until quite recently, the courts and the White House were sort of deliberately, checks and balances on each other. Well, if those checks and balances no longer work, what does that say for the future of both democracy and also for the future of what happens in the US and beyond? And of course, what happens in the US impacts other major economies and around the world as well. So there's a little bit of a question mark, but so the bottom line, going back to your point, Cookie, is that this bond question is significantly more than just uncertainty about Trump. Okay. And Jason, I must put this one up. Yeah, that's exactly right with regards to the budget. And also, thank you for this comment, which I quite like as well. Expletives, when in context, are fine. It shows the strength. And I think that's exactly right. And going back to Andy just briefly, I felt that was a really important and a breath of fresh air. And I've had many people say that afterwards. So thank you for that. Okay, so let's just get rid of that comment. Yeah. All right. I'm just going to have a little look down here, see what else we've got in the chat. Somebody from Bavaria said debt is a sweet poison. Yeah, sweet in the short term, poison in the long run. That's true, of course, for states, and it's true also for individual households. Soon we might come on to some of that. What I would say, of course, is that there is a big debate about to what extent the debt from, if you like, this weird relationship between central banks and government. So, they can issue debt, central banks buy debt, create liquidity. Is that the same? It's not totally the same. And there are people under the MMT banner that says, no, that's fine. You can create huge amounts of debt and, that creates liquidity to do things. The problem is that over the recent times, what we've seen essentially is most governments are not making good decisions about where to put the money. And so they're not investing in things that create more growth into the future. And what that means is then that the whole concept of borrowing more to create more economic output and outcomes isn't working. And so that's the problem. So, the MMT story is working only if you invest in the right things at the right time for the right outcomes, but that's not what's happened. So what we then end up doing is just creating more and more and more debt. And it is interesting that whether you saw this particular article, debt blowout, the worst in the developed world. Labour blew $2.5 billion. And there's a bunch of stories here that suggest that maybe, according to the OECD, the Australian shows that the gross public debt as a proportion of GDP has increased from 15.2% in 2004 to 57.9% last year due to the two global economic crises, the escalating costs of big build public works, and an explosion in social services spending. Now, sure, other countries have higher debt to GDP ratios. Japan at 238%, the US 122%, and Canada at 105%. But no other economy has experienced such a blowout at this scale. And you will, of course, noted that the expectation now is that we are going to have a significant structural deficit in Australia running forward. And that means that we've got this contention between government spending and what they're spending it on, what they're planning to spend it on, how much income is coming in. And of course, we've seen significant rises in the tax take because the tax bands have been frozen. And whilst we had a little bit of a tax handout a little while ago, that was more a political trick than anything else. The truth is that people are paying more tax. So if you look at the proportion of income that's going to tax, it's higher. And interestingly, of course, if you look at the proportion of the total revenue coming back into government, personal income tax has never been higher. And that's partly because a lot of large corporates are getting away not paying the tax that they should be taking, but should be paying, partly because of the way they structure their businesses and partly because of the various tax breaks and handouts that the government have given over time. And so we've got a problem where the revenue side, although it's growing, the expectation of the spending side is even higher. And of course, that then leads to some interesting little tricks where effectively the government then says, well, I got to try and win another election, so I'm going to do that by throwing money at things. And, this was quite a good one. I thought Albo bets the house on it. Help to Buy to try and boost that and pump that. Cash into flat packs to woo voters. and of course the other housing schemes as well. So effectively, if you listen carefully to what was going on around the budget, what we're seeing is a lot of little things being done to try and demonstrate momentum in the housing sector. Although, of course, whether this will really have much impact is an interesting question. And I would say that the Help to Buy scheme, where effectively the government takes a proportion of the equity on the property, is not always that good. So if in the UK they did this a few years ago, and they ended up with a lot of people stuck in properties that they couldn't actually move on from, and the equity that was meant to be growing didn't grow. And interestingly, also lenders were actually charging people more for loans under the scheme. So you've got to be really careful with these sorts of schemes. And sometimes these interventions don't actually provide you the expected returns that you might expect to see. And another one, of course, is the first home owner grants. Even the Productivity Commission in the most recent review said those don't help the people who need the help. They help other people possibly, but actually prices tend to go up because of the extra liquidity that's pumped into the system to be able to lift prices higher. And so that actually just lifts the boats. And so it doesn't really get you anywhere at all. And all the research around the world has said the same. But nevertheless, of course, first-time buyer support is still very much on the list there. And just as we sort of get into this, I will just make a couple of other observations about other recent announcements, because there are a few things going on. This one was quite interesting with the new crypto rules, quote, welcomed, and they're going to roll out a 4-pillared approach to digital assets alongside new tax rules for crypto products. So we're going to see digital asset companies held to the same governance standards as the financial services companies, as subjecting them to licensing rules that require them to act fairly and efficiently. Well, we'll know how that works well at the moment for other financial companies. There's some capital standards stuff, and there's a question of, is this really going to make a difference? Again, I have the view that a lot of this is mostly smoke and mirrors. Again, it doesn't really necessarily move the dial that much, but I suppose at least they promised they were going to do something, so they can say, well, we're doing something now. And that's a little bit of an issue, isn't it? Because as you go into the election, what you're trying to do is to say, look at all the things we've done, look at what we've achieved, and give us another term so we can do some more of the same thing. It's a little bit interesting. Another debate, of course, that we had was the question of working from home. And the PM says don't go into the office because working from home can save you money. And there was some analysis from various sources suggesting that maybe you could save about 5K a year by working from home. But then, of course, the coalition has said, no, we want to push people back into the office. That, of course, is echoing some of the tactics that have been used in the US and elsewhere. And my own perspective is that this work from home genie will never go back in the bottle, not least because it helps people potentially buy a property a little bit further away and perhaps a little bit cheaper. And also, of course, from a lifestyle perspective, it changes the game quite considerably with family commitments and those sorts of things. And the cost of healthcare, of course, are very high, but also the cost of childcare. So this may actually also, help people to manage their finances a little bit differently. And interestingly, I do see this, that where people work from home more, their lean on childcare particularly is lower. And so there are benefits to household finances from working from home. So I think this is an interesting battle. It'll be fought again around the election. And I'm afraid that we're going to see quite a lot more of that. Now, I said that this was going to be a show about property, and it certainly is going to be. I'm going to also have a look at and just see what other questions and comments are in the chat. Just to reconfirm, Help to Buy schemes by scams serves only to inflate property price and don't help the average Aussie. Want to help Australians make property cheaper rather than pumping money in it. Well, of course, the issue is there that we've had a journey over the last 30 years where prices have got higher and higher relative to income. It's less and less affordable. On some analyses, there are only a proportion of people in the Sydney basin now who can afford to buy. A lot of people can't, so they go elsewhere. The trouble is we've built this edifice, and this edifice has been a feedback loop between the finance system and the government and the property sector. And we've got to the point now where the value of property in the assets of the banks is so huge that if prices started to fall, then that would create considerable financial stress on the banking sector themselves. And of course, it would also reduce significant economic momentum because the construction sector is one of the biggest economic drivers of productivity, quote unquote, in Australia at the moment as well. So the last thing a government wants to see is property prices fall to help people get in more effectively, which then effectively means that you have to find ways of making it more accessible to people. And of course, 2% deposit up to 1.6 million or whatever the number is now, the latest version of their latest scheme. All it is doing is pushing property further and further away from those people who are trying to get into the market, making it more and more difficult for people to get in and to afford to live. And the other factor in all of this, of course, is over time, it's the old parable of the frog in the warm water. If you turn the water up slowly enough with a frog in a pan of water, the frog doesn't notice, and it just gets hotter and hotter and ultimately gets cooked. And that's the problem. We've got to the point now where people are normalized to thinking half of my income is going to pay my rent or to pay my mortgage. It's ridiculous. And I've shown that in my survey analysis. There are many postcodes where half of incomes plus, that's half of real incomes after tax and everything else, are going on the mortgage. Now, that's an unsustainable position. Of course, it means that we have less economic output as a result. We have people who are not spending so much at the shops. We have people prioritizing. We also have people, of course, frankly, borrowing more. So we're seeing a rise in second mortgages. We're seeing a rise in some of these buy now, pay later things and other sorts of lending too. So we're building a debt deficit and a debt Ephesus, I can't say. We're building a debt building that's really big. Edifice, that's the word I wanted. We're building a bigger debt edifice, and it's making it very difficult for people to try and get in. And we've got this intergenerational shift now because, of course, a lot of older people were able to buy in earlier, and they're sitting on these large paper profits on the properties they've got. But then the question is, if they want to downsize, they've still got to pay big to be able to buy something else. Or if they sell, what do? And then you've got younger people who are being considerably disadvantaged. Not only have they got the HEX debts, not only have they got little income growth in real terms over the last decade or two, but now this stupidly high price story. So obviously the right answer would be to bring property prices back to a more normalized level, 2.5 to 3 times average income. But that is not going to happen without the banks effectively taking a significant haircut on their loan portfolios, or the government foregoing a lot of growth and a lot of productivity from the building construction sector, which is why all of the government policies are about keeping prices artificially high and continuing to drive it higher, despite the high levels of debt. And we'll come on to the debt income ratios in a second, because that's quite worthwhile to think about. That the fact is that the debt problem, the debt burden on households has never been higher. And what I find fascinating about this is everyone is saying, oh, everything's fine. Well, if you look carefully at the aggregate level, that may be true. That may mask the differences. But if you actually look in detail at real households and what's really going on, then things are, far from good. And yet, we don't seem to be really having the conversation we should be having, which is how we bring prices back into better balance. The other point, of course, is that if you are actually in power and prices fall, you don't get any brownie points. So no surprise then that Claire O'Neill's statement about we don't want to see prices fall, et cetera, is part of the strategy. So that's my problem with this whole idea about where property prices are going. Now, I'm just going to touch on a couple of other data points because we had this information. This is from Roy Morgan's stress analysis, and they've actually shown that back in February we had 27.7% of those this is owner-occupied mortgage holders in mortgage stress, which is a reasonably high number. And then they showed the modelling effects. What would happen if interest rates dropped in April and May? And they said that would drop to about 1.4 million households in mortgage risk. Now, their approach is to use a different calculation method to the one that I use. I use cash flow. They use more underwriting standard methodologies. But nevertheless, it's interesting that they got a 1.4 number, 1.5 number, which is not a million miles from the analysis that I did previously. And those of you who saw the earlier show, we actually published information to the end of February, and we showed that the rental stress is very, very high at 76%, horribly high. We've got mortgage stress at about half, 50%, and that's up from 32% back in February 2020. And of course, we've also got this debt to income ratio, which is artificially low because it counts all households and small businesses rather than just those with a mortgage. So the RBA number is a bit of a problem. So on my basis, mortgage stress is about 1.8 million, but I use a cash flow basis. So these are households that have a cash flow problem, not necessarily going to default or anything like that. So based on your different method of calculation, we are somewhere between 1.5 and 1.8 million households, depending on your method, with a cash flow pressure. But of course, the rental sector, which isn't really covered by the Roy Morgan, is actually one that I focus in on. And you'll see there that we've got 2.3 million households in rental stress, which is 76.9% of those households. And that's a huge proportion. That means that overall, more than half of the population, or just around half the population, 47.6% of households are in significant pressure. And this is why I come back to this issue not being just a marginal issue. This is a mainstream issue, and it should be absolutely a mainstream issue inside the coming up election. Property should be the most significant and very important debate that we're having. Not least, of course, because interestingly, if you ask this question, this was a recent poll that showed that Australians, are they headed in the right or the wrong direction? 51% of Australians think we're headed in the wrong direction generally. 29% think we're headed in the right direction generally. And 20% aren't sure. Now that's interesting. It's the Redbridge data, I think. And they showed that the two-party preferred is 49 Labor, 51 the Coalition. Interestingly, the other polls we've seen recently were also pretty close too. But this is the primary vote. It shows you that the main parties are way down. And of course, the other, including the uncommitted, 6%, others 11%, One Nation 7%, Greens 12%. So it looks as though we're going to have a significant confused election outcome. And it's interesting that if you look at the first preferences, you've got 32% for Labor, 37% for the Coalition, and then you've got these other group. That gives you 51-49. So you can see that the political landscape is really quite weird at the moment. It's a bit like the UK. We had an election quite recently in the UK. Labour got back and they won a significant majority, but on a very small proportion of the total vote. And we don't have this reallocation of votes like we do in Australia in the UK. But what it means is that whilst they've got a significant majority, they've got a minority in terms of support in the country. And so we've got the democratic system effectively not working very well because of this idea that there's a lot of uncertainty and a lot of anger at the two main political parties. And I made a post the other day, you probably saw it, when George and I went down the rabbit hole together, and he interviewed me this time. And I made the point that both parties are the same. Most of the policies are the same. Most of them are aligned to neoliberalism. Most of them are driving a very similar agenda. So have we got real choice in the election? Is it really going to actually make a difference? Well, I think if enough people go for the minor parties and really, show that the majors don't have a support, there is a chance of a different outcome. But it's going to be quite messy. And of course, as somebody said to me the other day, it's ironical, isn't it, that at a time of global uncertainty, Trump and everything else, we are entering an era of political uncertainty in Australia. In fact, Alan Kohler also wrote an article about that the other day. We're entering a political era where, in fact, there won't be clear leadership. And that may not be good, or it might be good. I suppose it depends a little bit on how you think about it. Now, I just wanted to go back and touch on a few rather important topics here that relate back to property. And, one of the really interesting observations on the way into this is that there is an expectation amongst a lot of Australians that the government will get us out of the hole. And this was an interesting report. Voters support handouts even if they fuel inflation. This is a recent piece of research from Newspoll. And what was fascinating about this is there are still people who are saying the government will save us. They will actually throw more money. They will affect, that we don't mind. Now, the question is, of course, with this is, sure, you can go on doing that. But if the debt level continues to rise, the cost of debt continues to rise, that means that we're pulling more taxpayer money out of the ability to do productive things with it and effectively just supporting the overall economy. And of course, as I said earlier on, the debt momentum has been very strong in recent times. So there's a real breakdown, I think, between the level of understanding in the community about what's really going on and who's pulling what strings, and the expectation of what governments are actually expected to do and want to do. And this is a really important point. Hi, Leighton. Great to see you. Thanks for dropping by. Nice to see you in the chat tonight. So this is a real conundrum, right? People want the governments to solve the problem. The question is, can they solve the problem? Well, they can't really. And if you look at the budget and some of the issues that were actually tabled, you've got to say, really? Is it really going to make much of a difference? Is it really going to actually drive the outcomes that we want? Now, I guess you could argue, well, prices always go up. So does it matter that prices are continuing to rise? Does that give us more leeway and appetite to do things? Well, no. What we've seen now is we've reached the point where we've got almost peak price capacity. We're not going to be able to see prices continue to rise a lot higher. And we are seeing some interesting developments now across the property market. There was this article here, which is quite interesting. So this is talking about rents. They're saying, this is PropTrack data, show that advertised rents dropped in the last 3 months. Now, let's be clear. This is the advertised rents of new properties. This does not mean that all people's rents have dropped. It's only the rents available from new properties. And what I would say is that if you look carefully at some of the properties that are actually offered for rent, they're still quite expensive. So it is not as simple and straightforward to say, hey, yippee, rents are falling. Of course, they've highlighted this as well. Lucky 300 with lower rent prices. Rent prices dipped in more than 300 Queensland markets since the end of last year. Again, these are asking rents. This is not those already in property. And I would make the point that we're still seeing a lot of those people being charged an additional amount just to stay where they are. But if you go beyond the rental sector, there's this article too, where and why you can buy a home in Sydney for 2015 prices. There are Sydney suburbs, multiple housing booms forgot, the pockets where homes are selling for similar prices, or in some case, $100,000 less. Now, this is a bit of a bombshell analysis, they said. And interestingly, a lot of the analysis was around the Parramatta region. And that, of course, is a combination of supply demand. There's been a considerable flood of property there. This is from PropTrack. Supply is important to reduce prices. Suburbs like this are classic examples of why increasing the supply of homes is the solution to the housing crisis. They said, well, yeah, maybe. Or maybe these are some of the areas, and they're actually places on my stress levels where people are being forced in some cases to buy. So we've got to be careful. But the point I want to make is that this idea that prices reliably double every 7 to 10 years, I can point to you a lot of different areas where that's not true. which means you've got to be really careful about where you buy, what you buy, and all of those things, as we often say. Now, of course, they went to town with this particular line of argument, and this particular article here from Elizabeth Tilley. The year was 2015, a loaf of bread was $3, etc. So 10 years later, the cost of living has clearly risen, but new figures show home prices in 16 Queensland suburbs are now cheaper. And there are 125 suburbs where prices have only increased by 150,000 or less. And they're talking in a couple of areas there around Ipswich. Well, guess what? Ipswich is a considerably stressed area. So maybe there's a bit of an interesting point there. And here's another interesting one on the same topic, unit prices warning. And this is about the supply of new properties. So if you start making a lot of new properties coming in, guess what? Prices fall. And they're particularly warning here where Melbourne units are cheaper than they were in 2015. It's the same prop track story, but now they're making the correlation between the significant supply of new properties relative to where we were previously. And what that means is that we have the situation where possibly more prices are going to fall ahead. So supply and demand, build more stuff, puts pressure on prices, prices fall. And I just want to sort of take you to another little article here, which I found quite amusing because this was one where, whoopee, now in the area around Haberfield, the Department of Defence is selling a 1.9 hectare parcel of flood-prone land in Haberfield, which has been empty and stuck in limbo since the Army stopped using it more than 20 years ago. And according to the agents selling, the plots are expected to fetch between 1.6 million and 2.85 million. And these are quite big plots, from 500 squares to 1,044 squares. And they're scheduled to be auctioned shortly. Now, interestingly, this is fascinating from two fronts. Firstly, the area is situated below sea level and prone to flash flooding, and it's habitable. How does that work? Make you ask the interesting question. Haberfield, of course, was planned as a garden suburb. It's a heritage conservation area, and the council's rules say only single-storey homes can be built. At least half the block must be landscaped. And interestingly, they're saying quite regularly you see homes on the market for more than 4 million. Well, interesting. So then I looked at the median value chart over 5 years, and I saw that, yeah, well, if you look at the recent peak, it was back in last year where the average was around 3.2 million, but it's now sliding down. So we're seeing prices falling based on the data. And my stress data shows that, well, there's not a lot of mortgage stress, but there is some rental stress in the area. The net investment yields aren't particularly flash. And interestingly, if prices on the best case scenario happen, there is certainly a rise, but there's also a case on the base case, which is probably more likely, I think, than not to happen, where there could be a fall. So I thought that was very interesting that this was a combination of different things going on at the same time. And frankly, it begs the question, what on earth is going on? As Leighton said, brown paper bags growing out of the ground there. It could well be. Yeah, you just wonder, why? Why is this happening the way it is? And I get very annoyed when I see more and more building on floodplains, because frankly, building on a floodplain is asking for trouble. And as Edwin often tells me, think of places like the ponds. There's a clue there in the name. Maybe the truth is that we shouldn't be building on some of these areas. But of course, there's an intent to try and actually drive value out of property once again, but not necessarily to good advantage in my mind. Now, there's a lot of things we can also talk about, but I think where I'd like to go next is just to talk a little bit about the auction clearance rates, because this information shows you that we've had a little bit of a wobble. This is, of course, from the AMP Shane Oliver. And you can see there that the clearance rate moved a little, but it's not that flash. And in fact, there was an article here showing that the auction clearance rate slipped for a fourth straight week, and they sheeted it back to President Donald Trump's tariffs. And the clearance rate is not looking. Now, I've always said, of course, that the clearance rate doesn't tell you very much at all, and therefore be careful with these numbers. But it's interesting that they are suggesting that maybe the markets are a little bit on the on the slide at the moment, and I discussed that with Edwin in my rant yesterday. So we'll see how that goes. So there's a lot to talk about when it comes to what's really going on in the market. Is it really as hot? Is it really going to play out the way that you might expect, or is there something else going on? Now, of course, one of the things that's going on is the migration question. And it's interesting that the migration question is sort of on the periphery of the campaign, or the quasi-campaign, because we haven't officially hit the start gun yet, but of course we're very close. And so this article from Sky says that Chalmers has confirmed the government will be steadily managing the level of overseas migration down quite considerably, following a net gain of 446,000 people last year. Then, of course, you had this, which was that from Claire, saying when the population equivalent to the city of Hobart is landing in Australia in the space of a month, we shouldn't be surprised when Australian citizens find it hard to secure a rental. And Labor's migration failures creates an underclass of working homeless citizens when the population equivalent to the size of the city of Hobart is landing in Australia in the space of a month. Yes. Now, of course, there was this article also from a report that the ABC pushed quite hard, I thought, relating to the fact that overseas students don't increase demand for rental housing. I don't think we can blame the students. It's the university business model, said Cameron Kushner. Well, yeah, maybe. But the fact is, as Jordan said, if you add 1 million people to the population, 27 million people, does it really have no effect on the rental house prices? And as Louis Christopher said, according to a university, which is a conflict of interest, yep, they're trying to make it out as though it's some type of race issue. And international students have been thrown under the bus. Well, I'm not convinced. And interestingly, if you look at this more closely, I don't think that this is necessarily a sustainable position to take. Now, it's worth just highlighting the fact that, of course, we had a significant rise in temporary visa holders in Australia. You can see those rising there. And you can also see that we've seen significant rises in the capital city residential asking rents. And that's true for houses as well as units. And, I think there is a clear correlation between supply and demand. So I'm not convinced that they actually are arguing on a firm basis point. And this earlier report from the Australian government Department of Education said they estimate that around 7% of properties are actually occupied by international students, rather than the 4%, which was actually calculated at a particular time just after the COVID period. So 7% of properties. Well, 7% of properties don't sound to me like no properties and no impact on the property market. So I am of the view that this particular report, which was done from a particular university with a particular group of people, probably needs a bit of a harder analysis. Now, of course, rental properties and the cost of rental property is a huge issue. And you may have seen my recent interview with Morgan Cox. Morgan was the guy who stood up on ABC Q&A a couple of weeks ago and asked a very, very straightforward question about how come we're allowing strong migration when we've got all these pressures on the rental sector. And Morgan came on my show the other day, and that is the show that you can go check out if you've not seen it. Morgan is an interesting case study, the face of this really, because he is a pretty typical family trying to get by, finding it very difficult, working all hours, etc., etc. But asking the bigger question, why? Why is it the way this is? And I'm afraid that the 4 panelists on Q&A handled him with huge disdain. I was so disappointed. And I'm also disappointed that the ABC didn't, be a bit more proactive in their managing of the show, because the points that he was making are really critical, which comes right back to my point. Housing is going to be, it should be a significant issue in the upcoming election. But no, people want to sweep particularly rental stress under the carpet, despite the fact that we've got tent cities and all those horrendous things going on at the moment. And despite the fact that we've got high rental stress and high distress, of course, in rental and mortgage stress. But here's the other interesting factor. It's not just long-term Australians who are in rental stress. If you look at the data by my cohorts, the multicultural establishment are the first-generation Australians. And what's really interesting is if you look at it, 85% of those new migrants who come into Australia are in rental stress. That's nearly 200,000 people, or households, I should say. Now, this is something which is not being, I think, spoken about enough, because what we're doing is we're inviting people to come into the country and to be part of Australia, but not actually worrying about their housing too. Some people come in with lots of money and can basically outprice locals. Others can't. And so they get trapped. They get trapped into this same rental problem too. So to my mind, this is another very important insight into what's going on. And we just shouldn't separate the overseas from the Australian and say, oh, the overseas are actually stealing our houses. Some of those overseas migrants are actually migrants who are also having the same issue. So this is a much more complicated and nuanced argument than I think many have seen. But this multicultural establishment group is really one to watch. By the way, it's been high for quite some time, but is a lot higher now than it was. And Logan makes the point. The plan, we blame the immigrants. Yeah, well, that's the point, of course. It's much more nuanced and much more complicated. And as Otto says, we live in a time of unreality. People can clearly see the connections, and the elected officials are doubling down on the transparency false narrative. I think that's exactly right. There is a clear view, a clear gap, I think, between the reality that more and more people are seeing and experiencing and what the politicians are saying. And as we come into an election cycle, this is going to really come to the fore. Of course, there'll be a lot of rock throwing and everything else through the election cycle. But the question you've got to ask yourself is, are they serious? Are they serious about tackling housing and housing-related issues in a way that can actually lead to a better outcome for ordinary Australians? Because at the moment, it seems to me that we are actually going completely the wrong direction. And as I said earlier on, the problem is that there are people saying, well, just, prices will go on going up, just buy and get in there. Only a small proportion of people are capable now of getting into the property market. And even with the recent changes that the government's announced, the extra help to buy scheme support and those sorts of things, and even the small number of social houses that are actually promised to be built, haven't yet been built, of course. A lot of them are actually being purchased from other sources, so reducing supply elsewhere, as you saw in one of my recent posts when I went through this with what Andrew Bragg had said recently. So it is worth sort of reflecting on all of this. And I come back to a very important observation from this particular article here from Michael Reed, referring, of course, to Chris Richardson. Chris Richardson, of course, is right across some of this. Living standards are no better than a decade ago. And the stage 3 tax cuts have done very little really to boost things. The stimulus back then helped to buffer the households of savings, but that's really now disappeared. And I want to remind you about this, the real GDP per capita. So this is what it's like for ordinary Australians. We're actually not creating more value, well, 0.1% last quarter, but look at this chart. You can see here that it really is not particularly fruitful for many people. And I want to make the point also, and again I see this in my surveys, but this data also showed it too. More people are working multiple jobs. So what do you do if you need more income to try and cover your costs? Because inflation's still high and the cost of housing is too high. You get multiple jobs. And so you can see here that there are multiple jobs, particularly in healthcare and social assistance, public administration, safety, education and training, mining. And you can see there that the growth is quite strong. Whereas in wholesale trade and arts and recreational services, it's quite a lot weaker. That's from the ABS. So we do have a situation. And that situation, again, goes right back to what Otto said. There is a difference between the reality that we're seeing for ordinary people and what the politicians are painting through their various communication strategies and their various spins and all of those things. And that's really the problem. So at the end of the day, what we've got is a situation where things, unless we can change them, are going to continue to deteriorate for the bulk of people. But the problem I've got is if you look at the wealth distribution of households, the other thing that we've seen in the last couple of decades is that the distribution has got more and more skewed. So we've got a small proportion of the population, let's say 5% of the population, very vocal, very affluent group who are actually doing really well and saying, what's your problem? I don't see any problem. And guess what? A lot of politicians sit in that group. A lot of people working in the public service, particularly in Canberra, are in that group. And yet we have a lot of other people who have no hope of being able to play that similar game. And their wealth has been crushed. And if you take away the wealth, by the way, from the property revaluations, which are artificial until you actually come to sell, then of course there's a completely different story in terms of the wealth story. And in fact, quite often what you see when you actually drill down into this is that the truth is that most households have almost no buffers and no capacity to deal with a significant event. One of the interesting questions that we sometimes ask people is, how would you cope with the need to raise $1,000, for example? And very interestingly, amongst those in our mortgage stress category, about half of them don't have a strategy for dealing with $1,000 other than grabbing more credit on a credit card or hoping that in some way they can get by from friends and family. And that really is a very concerning situation. So there is almost no buffering. Others, of course, do hold some deposit account buffers in case of need, but then they're worried, very worried, that if they do actually break into that, then, of course, they're going to have a more significant issue. Now, one of the other interesting observations when you actually go into the story of migration in more detail, and I want to come back to migration from another angle now, is to show you that the truth is that the quality of applicants for jobs is also deteriorating. And this was data that came up quite recently. Actually, Greg Jericho put it out there and showed you that if you look at the number of applications per vacancy, you've got a higher proportion who are not qualified, not suitable compared with previously. That's a really interesting observation. And if you break it down looking at the recruitment difficulty by the high-skilled versus low-skilled positions, you can see there that the different share of employers recruiting over the past month had different difficulties recruiting, bold lines of 3-month averages. And you can see there that high-skilled positions, 60%, the total 50%, the low-skilled positions, 40%, which tells you something very important about being able to find people to do the jobs that they want. And by the way, if you look at this one, you can see there that recently arrived educated migrants earn less than similar Australian-born workers. And this is from the ABS, and CEDA did this analysis. And you can see there that postgraduate level, 66%, school-level education, 35 versus 33%. So this is the mean hourly wages in 21 nominal dollars. And you can also look at it across different cohorts of activity. So you can see there that hospitality, retail, and service managers at the top of the list there. And you can see unemployed, underemployed, not working in nominated occupation in that darker blue. And this is really interesting. You can see there that in hospitality, retail, and services, and in some of the other areas, people are not working in their qualified area. And the level of underutilization of recent migrants is significant. About 44% of migrants are underutilized. Oh, and by the way, if you look at this information that was posted quite recently too, you can see there that a lot of international students in the workforce 3 years after their bachelor's degree are working below their real level of attainment. And that tells you another very important story. So that even if you argue that high migration is required to support the jobs market, that's not working either. So we have a significant set of issues bubbling around here below the waterline. Now, the question you've got to then ask is, well, so what is the government doing? Well, bingo, $150 off your bill. This is an additional funding for electricity. Tarek, of course, said that's going to add up to then $9 billion in subsidies so far. But that money, of course, is just going back to the oil and gas companies, particularly the gas companies, who are already charging top dollar. And of course, the reason for that is that gas is the marginal price of electricity, and we are paying international prices for gas because of the way that the gas market is rigged in Australia. And as Tarek said, well, you could buy half a nuclear power station or many, many, many blocks of scale battery storage if you wanted to do that. And by the way, very importantly, this does also continue to suppress the CPI. So effectively, we saw a down forecasting of the CPI proportion going to energy because of the fact that the government's been supporting the bills. So that's really more about smoke and mirrors than really anything else, in my view. And it does show you the significant increases that we saw. By the way, of course, without the rebates, price of electricity would be much higher, 25% higher than where it is. And it's still a lot higher. And then in terms of other strategies, we've got this new plan to get, you can buy $1 million home with a 2% deposit. Well, that's great if prices go up, I suppose, if you're one of the fortunate ones, but there are all sorts of risks with that. They're also talking about supercharging the prefab and modular home construction, quality of which is, well, frankly, I think suspect. I've seen quite a lot of modular homes that actually are okay on day one, but degrade very much more quickly than ordinary homes. And this one really got my goat. This is saying Australians struggling with a cost of living issue will get access to interest-free loans up to $3,000 to help pay for household goods, medical expenses and education under a $50 million investment from the Albanese Labor government. Oh, and by the way, you might be able to borrow loans up to $5,000. This is payday lending. It is pretty horrendous. Now, this is actually linked back to the Good Shepherd Australia and National Australia Bank, who do these sorts of loans. But this is not solving the problem. This is just well, making it probably worse. And by the way, household debt to income ratio in Australia higher than almost any other of those comparable countries, and the net debt per person is still extremely high. By the way, particularly in Victoria. So this is a real problem. We've got a lot of debt, a lot of households in a lot of debt. And like I said, a lot of those have very little capacity to use cash for an emergency. Oh, and by the way, just going back to the question of, what happens then? Very good question. What happens if Australians default on that free labour loan? Well, of course, the answer is taxpayers pay it again. Aren't we great? So basically, the government is charging us more by way of tax, using that tax to effectively try and spread some of it around to try and get enough votes to get back in. Jason also makes the point, modular and prefab construction, nothing new, didn't work back then, why throw money at it now? Exactly. The reason is, of course, because they're trying to say, we're pulling all the levers. But the question is, are we really pulling the levers that are really helping or not? And, the bottom line is simply this, that there is a gap between the expectations and reality. There's a gap between what the politicians say that they're doing and what they're actually doing. And yet, of course, with the smoke and mirrors, the idea is, well, maybe they'll get votes. I'll just ask you, please, if you do like this show, please remember to like and subscribe to our show. It really does help to get this out and about. And we do rely on these shows being spread around the place to help perhaps to change some of the narratives. And just to sort of complete this little section, I mentioned the wealth disparity. Well, this was a slide that somebody sent me the other day. I've not totally validated it, but if it's anything like true, you can see there that the top 10% has 93% of the wealth in Australia. Now, this is 2009 to 19, compared with back in 1950, they had 4%. And this is actually quite a useful long-term view, just to remind us just how far we've come, but also how far we've not really come. And the fact is that more people are getting into more and more difficulty with what's going on at the moment. These policies, these 20 to 30 year of policies that I said to Morgan Cox the other day, have led to this situation. This is not just a happenstance. This has been a particular set of policies, from high migration to allowing the banks to lend more, to deregulating the financial system, all those other things, the homeowners for first-time buyers, homeowner grants, all those things. It's all part of a canvas that's led us into a cul-de-sac. Now the question is, are we actually likely to turn it around? Well, not unless we change trajectory. How do we change trajectory? Well, I suppose change the politics and political narrative. How do we do that? By how we vote, I suppose. That is, of course, the political system that we are part of. And by the way, just to give you a little bit of context here, the Roy Morgan data showed that the unemployment rate continued to go up on their data. I'd also remind you that the wages price forecasts from the RBA have been historically horrendously inaccurate. And guess what? It looks as though they could well be doing the same again. This is the February Statement on Monetary Policy forecast. And you can see there, if you look carefully, the wage price growth is already below that. And I think there's a very important point here about the RBA being part of the problem too, not only with their rate setting, but also with their expectation and modelling of the economy. And if you want to sort of see how this pans out, it's interesting to look at the private and the underutilization rate. Quite interesting to see how that changes and how it moves. The wage price is down as the underutilization rate is rising. And just on the employment mix, and going back to the government policy, it's worth noting here that the bulk of new jobs have been in the non-market sector rather than the market sector. So, the government funded or indirectly government funded. And you can also see here that there's been a huge growth in the non-market, including healthcare, public administration, and education. And it's interesting, if you look at this, health and social employment has continued to rise very strongly. We're not quite at Denmark levels, but we're well above the UK, the US, and elsewhere. And also, if you look at the flows from other industries into healthcare, you can see there that, as I said earlier on, there's been quite a significant drift. And of course, the bottom line is this: all of this is making it very significantly difficult to improve productivity in Australia. I showed you the productivity per person earlier on. So we're actually generating less per employed person. And labour productivity, of course, is a really big problem. Now, if you compare it, you can see that the US productivity is significantly up. You can see there that we've got Canada and New Zealand there, but Australia is continuing to dive down. It's been diving down for quite some time. This is based on OECD and ABS data. Interestingly, if you look at it from the mining versus the market, excluding mining and non-market sector, you can see there that the market sector is producing more productivity, but it's the non-market sector that's causing the problem, the sector where the government investment is huge. And as these charts from Goldman show you, effectively, the RBA has become increasingly focused on productivity outcomes in Australia. These are the keyword mentions of productivity. The lower productivity growth is associated with slower growth in investment per worker. Yep. And it's perhaps going to lead to a decline in the neutral rate ahead. And by the way, the annual costs for the NDIS and age pension are continuing to rise there. So all of those things are factors that are driving this in the wrong direction. So again, if I go back to this political debate, housing isn't working, costs of housing are rising, productivity isn't working. We're actually getting a lot of momentum in the less productive parts, important parts, but less productive parts of the economy. So how are we going to square the circle? How are we going to deal with the structural issues we have? There was nothing in the budget that really dealt with any of these issues. Oh, and I will just make this point because I think it's worth reiterating again that Tarek said, there is a way to fix this. You could actually fix the flawed bank levy and leave the Australians' budget billions better off. And it's based on an article in The Guardian. But of course, as Dog's Breath said, any politician that takes on the banks is done. Look at Jared Rennick. It's better to take the piss out of the public and take on the supermarkets to make 10 times less money. And that's really the point, that there are levers that could be pulled. There are things that could be done. And the finance system is clearly one that needs to be really changed, but it won't be changed. Why? Because the banks are so strongly capable of lobbying the government. The government's very much wedded to where they are. And all of this leads to, well, this Minuk chart, which I come back to, less capital deepening equals lowest productivity. We're actually investing less. We're investing less per person. And as a result of that, what it means that we have an economy which is stagnating, we have momentum which is fading, we have migrants coming in who can't find anywhere to live, we have people in Australia who are struggling to find somewhere to live themselves, we've got house prices that were well above where they should be, and we've got high levels of mortgage stress and pressure. And yet, other than the very small piecemeal announcements that were made recently from the Albanese government, there is no intent to do any of the structural work that needs to be done to take the economy to a new place. So we're stuck. And that's why this election, I think, is going to be a pretty important one. Okay, so I think that's pretty much covered what I wanted to go through. Yeah, there are a number of scary graphs that I've just gone through there. And I have to tell you that the data really tells an important story. When you put it together and you see how all the pieces hang together, then you understand why we've got this mortgage stress problem that we've got, et cetera, et cetera. Corrupt system, yeah, there's some, and as you heard from Andy in last week, those who listened to that show, there are things that could be done, breaking up some of these large organizations, regulating them properly, controlling them properly. Our regulators are part of the problem. That's both APRA and ASIC. They're not doing their job. I don't think the RBA is doing their job. I don't think the government and Treasury are doing their job. Almost wherever you look, we've got these issues. So it is... Smooth has just popped in. Hi, Smooth. Good to see you. Better late than never. Nice for you to drop in. Thank you very much. Okay, so Logan's just taken on another point. Superannuation, designed in Australia so we could borrow less from overseas. According to the fund managers, they ran out of things to invest in here, and they're investing overseas. Yeah, the superannuation system is another example where 35 to 40 billion a year on fees taken by the financial system. Why? Well, it's not necessarily playing out the way it should. And as you say, a lot of the superannuation funds are actually now looking to invest in the US and elsewhere. Another crazy example of bad policy from early days. Cookie Boy makes an interesting question. What do we do about the NDIS? Yeah, this is a really interesting question, isn't it? One of the factors to bear in mind here is to define the scope of the support and who needs it. And there's an interesting analysis going on in the UK at the moment. About 14% of young boys, let's say sort of 14 and above, 14% are actually on some disability or similar support mechanism in the UK at the moment. We've actually, I think, moved the dial to the point where there are a lot of people who clearly do have some issues, but actually the question is, do they need the level of support that they're actually getting? Now, I think there are others that probably don't get the support they should get. So we've got to be careful about not throwing out baby with bathwater here. Clearly, there are people that need support, and it's appropriate that we give them support. Look at the Scandinavian countries who actually have higher income tax, but also have a better support mechanism to help the community and society. And in fact, people are happiest in Finland, I think I saw the other day. So we've got to get the balance right. Is it right at the moment? No. The other factor I'd say is that a lot of the rorting is not done by the applicants. It's done by the providers. The providers are taking that government money and are providing services, but not necessarily efficiently. And so I've had the view for some time that the efficiency question in the NDIS is another part of the problem. So we've got two questions, eligibility and efficiency. And we need to be looking at both of those. But at the moment, the proportion of funds from taxpayers going into the support sector and the NDIS sector will continue to rise. And whilst I think that we have, more attention now to this issue, going back to my productivity point, I'm not sure we're solving it. And Jason asked the point, do probity checks on the people delivering NDS services at the highest level? Yes, absolutely. Probity checks required. We need to understand exactly what we've got. And interestingly, an aside, but an interesting aside in parallel, there was a COVID inquiry phase in the UK just run. And they were looking specifically at the call for the PPP, the sort of masks and things and the gowns through COVID. And they actually went to different companies and they didn't actually do really any checks. They just simply said, can you do the specification? The company said yes, and they actually got a lot of government money, and they've discovered that their money was rorted. A lot of the materials that were produced were unacceptable, and the personal protection materials ultimately were dumped. Classic example of you need to have the right processes and the steps, even if you've got an emergency, to be able to make sure that you're not actually taking people and taking taxpayer money into the wrong domains. And I guess that's the real bottom line point for me. Housing is a problem, migration is a problem, productivity is a problem, the tax take is a problem, and the way that government spending is a problem. So we need to put all the pieces together and then figure out perhaps some of those alternatives, because there are alternatives. There are things that could be done. There are definitely alternative strategies, but the problem is, of course, that when you actually are looking at the election cycle and just trying to get you through to the next election cycle, then governments tend to throw the baby out with the bathwater and just do the simple and, playing to the crowds. Is it PR? Is it marketing spin? Whatever you want to. No, it's not actually dealing with the structural issues. It is not good. All right. Well, I think I am done. So I just should go back and just make sure I've not missed anything important in the chat. As Cookie Boy says, we were told property prices always rise. Yes. Well, you saw earlier on, sometimes property prices don't rise. And I continue to quote, Ride apartments lower now than they were in 2015. And Cookie, I want to acknowledge particularly your provision of the news clips. Cookie, you do a great service for me. Thank you very much for enabling me to be able to actually put these back up on the show and help to tell the story of what's going on. It's certainly very interesting and worrying, but the purpose of this show is partly so that we get a sort of perspective as to what's going on. But as you saw with Andy the other day, I'm also trying to sort of suggest things that could be done to change things, because I don't want just to be sort of yelling from the sidelines, it's all terrible, it's all terrible. I'm also wanting to say what we can do in terms of thinking some of those changes. There are things that can be done, and it is quite important that we do take what we can and use our vote well, make sure that we understand what's really going on, and don't be misled with all the propaganda. Interesting question will be, how much will the government spend on advertising over the next month to 5 weeks? Ask the question. It's a big number. And I have to tell you that the story is going to be very interesting, I think. Interestingly, I had one other point to make. In the last week, I've had more than 10 people contact me directly and say they're planning to leave Australia. And these are people who've been in Australia for some time, sometimes grew up in Australia, born in Australia, sometimes they migrated to Australia some time ago. But they're now questioning whether it is really a place that they can call home long term. Now, that's a very concerning observation. And two perspectives. Firstly, obviously, by using the political process, there is still a chance to sort of steer a different path if we can make it happen. But the second is sometimes people do decide to cut their losses and say there are alternatives that are better. And there do seem to be some alternatives in some countries that do seem to be better at the moment, which is, of course, an interesting observation. So it could well be that we'd see some of those who are more able and capable of leaving to leave. But then the question is, what does that do for the people who can't move because they don't have the cash to move or the ability to move? And what does that do for the ordinary people of the country? And as I said in my rabbit hole show the other day, I'm worried about the fact that we've got this disconnect between the few percent who are doing great and the politicians who seem to be very much aligned to them. And yet a lot of other ordinary Australians are really up against it, and they don't seem to be getting a look in. That's not right. It's not fair. We need to change. On that note, Jason, thank you very much for your super chat. Really appreciate that. It really does help to cover some of the costs of what we do here. And Cookie is saying, been looking overseas, looking for low tax havens. Yep. And as Otto says, unless they have generational wealth, they can't. There are better choices elsewhere. And Lulu says, where? Well, yeah, it depends on what you need, I suppose. Some people look at Asia previously, although Asia is looking less attractive. Scandinavia is quite interesting for some as well, if you've got ability to go there. Even the UK, I must tell you, the UK, there are some pretty horrendous things going on here. But actually, as I said in my earlier show, the costs of supermarket goods are 1/3 below where they were in Australia. The cost of the NBN equivalent here is a lot lower. And, swings and roundabouts, perhaps. Cookies suggesting Andorra, Malta, Panama, Costa Rica, Puerto Rico, USA or Cyprus. Who knows? Anyway, on that thought, I will say thank you very much for spending some time with us this evening. It wasn't quite the show I'd planned because Spacious didn't make it. We'll get him back on later. Just to say that next week, we're going to have Damien coming on and we'll be talking about the markets and what else is going on there. Cookie Boy says the Isle of Man. Yep. Isle of Man has a nice tax haven status. So that might be worth thinking about. The weather's not great, though. It depends on what, is how important is the weather. Anyway, thank you very much for watching. Just before I go, I will just show you the dogs. They've not moved the whole of the time, which is great. Seeing as when 3 dogs get going, it's pretty significant from a noise perspective, but they're great. Oh, Jason says Cambodia. Yep. I know a few people who've gone there and they talk about the cost of living being very, very, very much cheaper than Australia. On Otto says still good. I'm glad that the show passed muster, Otto. Thank you very much for that. And thanks for your comments as well. So I'll say cheerio. Thank you very much for spending some time with us this evening. We'll see you next week and take care in the meantime. I'm sure we'll have the election running by the time we speak next week, so that'll be fun. And check out the recorded shows meantime. This is Martin North from Digital Finance Analytics, signing off. Cheerio.